Good morning, everybody. Survived the weekend, did we? Nice job. Way to make it all the way to Monday. How's everyone doing today? Morning, Josh, Luciano, Bobby, Jim. It's good to see you guys. Gary, always great to have you in the room. Jason, nice to see you. Everybody have a good weekend. Everybody relax. Good morning, Dave. Good morning, Zeba. Love it. I got the coolest class in the world here. Guys, I hope you had a great weekend. I hope you relaxed a little bit. I hope you took a break from all that study, but I hope that you did some study. I did about 5 hours of market replay this weekend. I studied some pictures, spent a little time bugging my big brother as he recovers from COVID, going, "Hey, what do you think about this? What do you think about this?" Um, Always a student is my philosophy. No matter what you think you can probably know more, right? Guys, it's great to have you here today. Just like every morning in class, we're going to check news, right? And today's pretty much a no event news day. Monday, March 6th, 10 a.m., the factory orders go in. It is low impact, not expecting a huge move in the market, but you still want to be aware that there is news at 10 a.m. The news that I'm usually looking for are these red boxes or these orange boxes letting me know that there is a high or a medium impact news. And these are the ones that can move the market, make things go a little bit crazy, um, maybe stop you out of what appears to be the perfect trade because somebody got emotional. Hey, good morning, Mohammed. Nice to see you. So guys, every morning I'm coming in and I'm taking a look and I'm just saying to myself, all right, this news may move the market. I don't want to be in front of it. I'll go refill my water, get another cup of coffee if I'm not too wound up, maybe toast a bagel, something that isn't being in front of that news. And then, hey, good morning, Christina. And then, guys, I'm going to give you a little tour of the education page. This is where everything that I talk about comes from, guys. And I like to say that every day because I think it's important that you know that there really are no secrets with Nexgen. Good morning, KR. We provide you everything you could possibly need. Hand to the sky, honest truth. We're going to give you the tools, guys. I'm going to teach you how to use those tools. All Nexgen is doing is handing you a hammer. And we're saying, all right, now you're going to build a trading plan. Now you're going to build this career that you can take with you for the rest of your life. It's going to be your job to learn how to use it. It's going to be your job to take that hammer and build something amazing. And that's what this class is for, guys. Every day in this class for 15 hours a week, you have access to live education. You have access to feedback on everything that you do and everything that you see. You have the ability to take pictures of your charts, to tell me what you see, to have a conversation. Every time you post in this room, guys, it's like a private session. You and I are having a one-on-one. Um, Take advantage of that. I can't stress that enough. Take advantage of those private sessions. Show me everything that you're doing, guys. I tend to be the warm, fuzzy Novak. I'm not going to beat you down, but if I see an opportunity for you to do something better, we're going to talk about it. We're going to talk about the way you're reading your charts. We're going to talk about the way I'm reading your charts. I'm going to click on the software user guide. And this is for those of you brand new to the software, brand new to the NinjaTrader. This is kind of your NinjaTrader how-to. Whether it's opening charts, closing charts, scaling charts, if you're looking to put stops and targets in place. Maybe you want to change the look of your trigger lines. Maybe you want to change colors. Maybe you want to build new charts, add templates. All that's for you in the software user guide. If you're having a struggle with NinjaTrader class isn't in session, go check this out. See if you can find that answer. If class is in session, raise your hand. I'll do everything that I can to help you out. My approach in class is if you ask a question and I know where it's at in the manual, I'm not only going to give you your answer, but I'm also going to show you where to find that answer next time. And then we have the tutorial section, the indicator tutorials. This is where class comes from, guys. This is where the rules come from. This is where everything that I talk about comes from. And I want to go to the glossary of common terms first. This class is designed as a foundational approach, guys. This is putting you in the position to recognize the absolute best of the best as your first small goal. And we speak a lot about a high probability trend trade. And this is when all the indicators on every chart agree for the rules for the trade. And typically, this is when all the triggers are their strongest, no termination conditions exist, and there's no trouble spots between your entry and your target. My hope for you is that you allow it to be simple for the first couple weeks and you focus on that high probability trend trade, that 5-1 simple trade that happens after a termination condition on the 13-2. Guys, this is a trade that typically wins 70 to 80%. This is a trade that has every indicator on every chart in favor for it. And if you take just a minute and you focus on that one simple trade in the beginning, allow it to be simple, let yourself be new, it's going to help you become a chart reader. And 90% of what we do is reading charts. 90% is looking at these indicators, taking the information, and that 10% is going to be spent using those advantages to enter a trade. And chart reading mastery incorporates 3 essential elements. On day 1, you're going to be like, man, that's going to be tough to figure out, right? I'm going to be able to look at my indicators and understand where the market is likely to continue, where it's likely to go, and where it's likely to stop. And 5 days in, you're going to be like, oh my gosh, Mark was right. I can understand where the market is likely to continue, and I'm going to use that point for entries for a high probability trend trade. I understand where the market is likely to go, and that's going to help me pick out profit targets. And I understand where the market is likely to stop, and I can identify and respect termination conditions so that I don't trade into areas likely to stop the market. Guys, these are 3 very simple concepts that are going to come about with 3 rules. Take a big sip of water here. 3 rules for the high probability trend trade. The first rule says that your large chart needs strong trigger lines. The second rule says no termination conditions, that you got to have room to your profit targets. Makes sense. And then your third one is going to be for your entry, to use a limit order at areas, right at triggers. Guys, your equation, I suppose, for a trade is a trade equals momentum, rule number 1, a clear path, rule number 2, and an entry area, rule number 3. And you're going to put these 3 rules together in order to come up with that high probability trend trade, and you're only going to need 2 charts to do it. You know, let me give you the rules in the room. Let me copy that picture. Steal that picture, guys. Make that your desktop background. 3 rules on 2 charts. We use 2 charts for a reason. We're going to use the 13-2 chart because it's like a broad stroke of a brush. You'll be able to identify, using only the most current bar, the trend of the market. If the background is green on a 13-2, guys, we're in an uptrend. We're only looking for rules to be met for high probability trend trades long. If the background is red, we're in a downtrend. We're only looking for rules to be met for high probability trend trade short. Let me show you just how easy it is. Guys, this is crude oil in the moment. Are we in an uptrend or a downtrend? Should we be looking for rules to be met for longs? Or should we be looking for rules met short? It's pretty simple. Green is up, right? How easy is that? Keep yourself on the right side of things. Make sure that you're not fighting. Guys, we're also going to be able to determine whether or not we have strong triggers. This is rule number 1. And we're going to make sure that we have a clear path. This is rule number 2, making sure we're not trading into anything that may stop the market. Once again, guys, here's Fibonacci resistance. We've reached a termination condition. You can see on crude oil, these red lines stop the market. This blue line stopped the market. We're going to look for advantages when the path is clear, and I'm going to teach you how to do that. But we're going to use all this information for rules 1 and 2 because this broad stroke of the brush is giving us the overall temperature of the market, right? It's letting me know that the market is trending a certain direction. It's letting me know that I have momentum. It's letting me know that there's nothing in the way, guys. And your large chart reflects the large crowd opinions of the market, the majority. The majority says that we're in an uptrend. The majority says that we have momentum, and the majority says that we have a clear path. And then we'll go to that 5-1 chart. which is the minority. And the minority is going to get us to that great entry. So the 13.2 gives us the overall temperature. The 5.1, whoops, is where we're going to refine that broad stroke of a brush. You're going to pinpoint that area where the market is likely to continue. And guys, we're going to be so comfortable in our ability to identify this area that you're going to use a limit order to buy or sell a pullback at areas. And this is going to allow you to reduce your risk and maximize your profit potential. So I want you to tell yourself as we go into Monday, it's Monday, I'm going to let myself be brand new. It's Monday, I'm going to let it stay simple. I'm going to focus on the absolute best of the best and give myself every advantage as we get into the market, guys. So let's go through what those rules look like. Ziba, in crude oil, the space between the mid-band and resistance on the 13.2 is considered a clear path? Absolutely not, Ziba. Great question. And when we talk about terminations, Ziba, how many trigger lines are through that area of resistance? Absolutely none, right? So we'll talk about that clear path. And there's a really simple two-part process to identifying it. But let's talk about momentum first. And we can spend some time on termination conditions today. That was a great question. Let's start with the momentum part of the equation. Strong triggers, guys. In an uptrend on the 13.2, when the small triggers are above the large triggers are wide, they're angled in the direction of the trend. Guys, this is your best of the best look. This is what we call a strong trigger look. When you have a strong trigger look, the odds are favorable for the market to continue up. It creates the advantage of odds favorable momentum. In a downtrend, the smalls will be below the large will be wide, angled in the direction of the trend. Once again, the odds are favorable for the market to continue down. Guys, this is your first, whoops, son of a bitch. Because what is a Monday without technical issues, right? Can you guys hear me okay? Awesome. I may have uttered out son of a bitch. Sorry if you heard that. You just heard it this time, though. No pick. Is it up now, Jerry? I just put it in there. Okay, cool. Sorry about that. You know, I found that Discord likes to do this to me at least once a week, just to remind me who's in charge, I suppose. Guys, is everybody comfortable with this? Odds favorable momentum. When we're in an uptrend, from that point where the small accelerate away from the large until they return, guys, this is your best of the best. This is your highest advantage scenario. Everything says the market's likely to continue in the direction of the trend. What you're going to do to study between these two areas, any price that's lower than the midpoint of that 13.2 bar, and this is what's going to look like a tail, this is what's going to look like a wick, is a possible trade. We're going to get in the habit of circling those tails every time we see them. So if we go to a 13.2 chart, guys, smalls above the large are wide, they're angled in the direction of the trend. Does everybody see that tail? This is your first task. Your first task is identifying odds favorable momentum and understanding that if a tail is there, that it is a potential entry. Is everybody comfortable with that look? As we scroll back, Monday pre-market, not a lot of examples, but here we go. There's another one. Give me a Y in the room if you're with me, guys. Small separated from the large, larger wide, angled in the direction of the trend. Here's the tail. What are these tails? They're nothing more than potential entries. But we haven't gotten to entries yet, right? So all we're doing now is we're identifying odds favorable momentum, and we're recognizing that these opportunities may not happen every second of every day. That it's going to take a little bit of patience, and 90% of what you guys do is just going to be reading indicators, making sure that you have that odds favorable momentum. Once you have it, the next step in the equation, guys, my picture went away. The next step of the equation is making sure that you have a clear path, right? Making sure that there are no termination conditions. There we go. Can't have anything in the way. We need room to the profit target. So we've already established the first rule, that momentum, that strong trigger look. When that rule is met, then we look for the clear path. And the clear path is pretty easy. So a termination condition is a Fibonacci-based indicator that may reverse the market. And it's based on a comparison of the area and the trigger lines. And guys, here's a picture of all the areas that may stop the market. Being able to identify the area first is the first part. It can be a magenta divergence high. It can be a cyan divergence low. It could be blue Fibonacci support, red Fibonacci resistance, or these one-to-one dots. Guys, these areas may reverse the market, but we have to go through a process of comparing the area to the trigger lines. So those same trigger lines that give you momentum, and guys, I'm going to take a picture of the picture so that we can talk about this in detail. Two things have to happen to identify a termination condition. The first one is that price reaches an area. We type this in the room for you. Guys, this is a great thing to write down if you're brand new, if you're looking to really be able to identify these. Price reaches an area. What does that mean? That means that these price bars have made it all the way down to support, right? When price reaches the area, I want you to ask yourself one simple question. Where are the triggers? If price moves down, these price bars move down, if they reach support and your trigger lines remain above, guys, you've reached a termination condition. You've reached an area that may stop the market. It's not guaranteed to stop the market, right? But it may stop the market based on the comparison of price reaching the area and those T3 trigger lines. If our equation says that we need a clear path, what defines a clear path? Well, we've defined when we don't have a clear path. Price reaches an area, none of the trigger lines break through. Don't trade into that area. It may reverse the market. A clear path is established when both the small and the large triggers break through the area. Guys, then we're clear to take a trade. We have the advantage of a market that's cleared the potential problem area. And because it has, we're looking for the rules to be met for a high probability trend trade. So guys, give me a Y in the room if you're with me. Price reaches an area. If the trigger lines don't break, we're not looking to trade into that area. We don't have the advantage of a clear path. Both the small and the large break through. We have that clear path, and we go back to making sure that rule number 1 is met because we know that rule number 2 is met. So Ziba, on the 13.2, and of course it's changed just a little bit since we spoke, when price reached this area of resistance and none of the trigger lines had broken through yet, do you see how that it's a termination condition? We're not worried about the mid-band. We're not worried about anything in here. We're looking at that area that price has reached. And guys, you'll get to a point where you get pretty good at recognizing these. Price reaches resistance, none of the trigger lines break through. We have a termination condition. Price pulls all the way back to these one-to-ones. None of the trigger lines break through. Guys, we can't go long, we can't go short. We're waiting for the market to break out of this area. Give me a Y in the room if you're with me. And you can scroll back on your 13.2 and you can start this recognition process, right? Price retraces all the way back to resistance. None of the trigger lines go through. I'm not looking for long trades. D, we hadn't gotten there yet, but they haven't, have they? In order for our trigger lines to have broken an area, your small trigger lines are one piece, right? They're two lines, D. Great question. One line made it through, one line didn't. So not yet, but we're close, right? So we're just kind of in a holding pattern, waiting for that clear path. Does that make sense? Whoops. So price reaches resistance, no trigger lines go through. Once both the large and the small break through on resistance here, this area is considered broken and begins to act as support. But we've got some trouble in the way. So 90% of what we do is waiting for that trouble to clear, right? 90% of what we do is letting the market tell us that we have a clear path. Walter, I think if everyone's in here, then nobody had a problem. What are you not able to see, Walter? Sometimes if you can't see the video, log out, log back in. That'll refresh it for you. Maybe that'll help. Oh, I'm not sure about that. That may be security on your laptop. Reboot your laptop. Shut it down, turn it back on, see if that helps. So guys, we've identified no clear path. We've identified clear path. Remember we said that in the beginning, our whole focus is going to be on high probability trend trades, right? Our whole focus is going to be making sure that every indicator on each chart agrees. Guys, that high probability trend trade turns you into a chart reader. Being a chart reader opens up the door for medium probability trades. And a medium probability trade is defined as when most indicators line up for a trade. However, a small issue exists. Your ability to read your charts is going to help you identify that small issue. Guys, this is why I ask you to focus on high probability for 2 to 3 weeks and really get comfortable with what you're seeing. This will be the vast majority of your trades eventually. And when executing these medium probability trades, you're going to take them and manage assertively. Your ability to read your charts is going to allow you to manage them assertively. If there's trouble in the way, your ability to read your charts is going to identify that trouble. You may take a portion of your position off at that area, get to a zero loss level. Why am I bringing this up? Because a high probability scenario means that you have a clear path 100%. Your first medium probability is going to be when those small triggers break through an area, but the large triggers have not. And guys, this is what we call a 50-50 look. And it's not a 50-50. That's not your chances of winning a trade. 50-50 simply means that the area hasn't broken yet. 50-50 means that the area has the potential to break. Let me put to break with that odds favorable momentum. Everybody comfortable if I just put OFM? But it has not broken. This means we do not have a clear path. Guys, that's our issue. Smalls have broken through with odds favorable momentum, but the large remain above. Guys, this area of support has the potential to break, but it hasn't yet broken. This is going to be your first medium probability trade. When you have a medium probability trade, you want all the other advantages to be present. So on a 50-50 trade, let your entry be perfect. And we'll talk about that perfect entry when we talk about entries. Is everybody comfortable with that? We have no clear path. We have a clear path. And now we have the potential for a clear path. An area with the potential to break that is not yet broken. Smalls are through the one-to-ones. The large have not made it. This is an area with the potential to break, but it has not broken. Is everybody comfortable with that live in the market right now? If we're going to look for that best of the best entry, guys, we're going to insist that everything is perfect. if we get that pullback to enter the market. Understanding the recipe, price reaches, where the triggers, is going to get you to where in the moment you can identify termination conditions, guys. Divergence lows can be a termination condition. When divergence prints, it's just a pivot. Guys, this isn't a termination condition. Price has exceeded the area. Your small triggers have exceeded the area. Your large triggers are trying to exceed the area. It's when price returns to this cyan low and none of the trigger lines break through. This is a termination condition. Price reaches the area, that divergence low. None of the trigger lines break through the divergence low. This termination condition creates a full reversal, guys. This is what we call a pivot stop out of a prior divergence. It can be a very powerful indication that the market's going to reverse. You'll also see it from the top. Price comes back to this divergence high, creates a full reversal. This divergence high, pivot stop out, creating a full reversal is a very powerful indication, especially when it happens at Fibs. Awesome, Walter. But the recipe never changes. Price reaches resistance. No trigger lines break through. This is an area likely to stop the market, and we're not looking for long trades. Price retraces all the way down to support. Trigger lines don't break through the area. We're not looking for short trades. This support is likely to stop the market. Remember that 90% of what you do during the day is waiting for advantages, right? Price comes back to two sets of resistance. One divergence high creates that pivot stop out. Now it has a little more power. This termination creates a full reversal, gives me odds favorable momentum. Guys, this is what we call a strong top. This is the best of the best look, and any high probability trend trades that happen after this look have a higher chance of winning. Price reaches one-to-ones. Where are the trigger lines? They've all remained above. No short trades into these one-to-ones, even with odds favorable momentum. This termination condition creates a full reversal. The full reversal gives me odds favorable momentum. If then, there's one of those circles right on the tails, guys. There's your best of the best entry for a high probability trend trade. Is everybody comfortable with the recipe? Give me a Y in the room, guys. Your participation lets me know that I'm not losing you. Price reaches an area. If the trigger lines remain above, no trades, right? Guys, sometimes all your trigger lines break through an area. Sometimes you have odds favorable momentum and the market appears to turn on a dime. Why is it not a pivot stop out? Because remember, D, in order to have a pivot stop out, we must first have a pivot. So the definition of a pivot stop out, D, that's a great question, right? Here we have the pivot. The pivot stop out happens, D, when price exceeds that divergence low and then trades the other direction. So we've created the pivot, and this is the stop out. If all of these buyers, and here's the thought behind it. This is how I had it explained to me. So right here, all the buyers say, hey, let's go long, right? And they start to push it up. And the sellers push back. And the buyers let them believe that they're on the way to victory. And right here at this key price where the buyers wanted to get in the first time, where the market lost momentum, they're going to let them exceed it just a little bit. And then they're going to absolutely unload their guns and take that trade that they wanted to take. They're letting all of these sellers that got into the market push it down, get them to a little bit lower price. They stop out the previous pivot, and then the buyers take back over. And you see the same thing from the short side. The buyers are in control and the sellers push back just enough to give them a false sense of security. The buyers push one more time. Nexgen users, you can identify that pivot stop out, and then the sellers absolutely unload. Does that make sense, D? So first we have the pivot, and then we have the stop out. Awesome. And you'll see those a lot. You'll see these divergence highs and lows. And of course, we're not going to see one right there. Gary, you like to wait for the market to open? Well, of course, we're not going to see one if I scroll back a couple hours, D, because that would be way too convenient, right? All right, so when we talk about those termination conditions, D, since we didn't have a previous pivot, well, I guess technically there's one here. It may be a pivot stop out, but it's not a divergence pivot stop out. Price reaches the one-to-ones, and yeah, you see that divergence print letting you know that it's losing momentum. That never hurts. I love to see divergence from a fib, especially when it creates a full reversal. Adds just a little bit of power, that loss of momentum. And then you get that full reversal. You let small and large give you the clear path. Looking for that entry. Guys, when the market turns from absolutely nowhere, not from Fibonacci support, one-to-ones, nothing, this final termination condition, guys, and this is the one that you're going to be able to read on your small chart before you see the large chart changing. Remember that the 5-1's a refinement tool, right? What happens in one bar on the 13-2 can happen in 15 to 30 on the smaller chart. 3 divergences in the same price range may terminate the trend. Is everybody comfortable with the concept of divergence? Did you watch a video? What does divergence mean? It means that when price came down and formed a pivot, the market went from down to up. Guys, all it means is that the momentum isn't following. The momentum of the market didn't match. The momentum doesn't match. The momentum doesn't match. When this happens 3 times, it may terminate the trend. It becomes even more powerful when your small triggers enter the large triggers. Guys, remember that look? Anything can happen versus odds favorable. 3 on their own may stop a trend. 3 with those weak triggers is a little more powerful. And then when that third divergence is higher than the previous, it's that head and shoulders pattern. So guys, if you look at the bottom here, 3 divergences. Look at the top here, 3 divergences. That's kind of the scenario that you're going to recognize on your 5-1 when these turns from seemingly nowhere happen on the 13-2. So not only is it going to allow you to see that change, it's also going to allow you to manage trades, guys. Remember we talked about those medium probability trades? If I entered the trade right here at a mid-band and I'm going short, 3 divergences gives me an opportunity to manage out of this trade. But remember that termination conditions, guys, we're using that comparison of areas. That happens on your 13-2. Good morning, Safia. So give me a Y in the room, guys. We've got odds favorable momentum, right? We're just going through the equation. We have strong triggers. We have the advantage of momentum. We have no termination conditions. We have the advantage of clear path. Have you guys noticed how I say the same darn thing 1,000 times? Christina, nice to see that purple next to your name. Why do I say these things over and over? Because repetition breeds confidence, guys. So when those rules are met, what do you guys say we learn to pinpoint that entry? Let's find that area where the market is likely to continue. And guys, when the rules are met on the 13-2, when you have those advantages in place, here's your 5-1 chart, that smaller chart, that faster chart, that refinement chart. I'm going to show you a quick picture about the refinement process, guys. When the rules are met on the 13-2, 1 bar, odds favorable momentum, 1 bar, no termination conditions. On your 5-1 chart, all of these bars make up just this 1 bar. That's how we're able to refine that broad stroke of a brush to pinpoint with amazing accuracy where the market is likely to continue. This is why we look for termination conditions on the 13-2, because the crowd says we're going down. The crowd says that we have momentum. The crowd says that there's nothing in the way. We're going to let that little oppositional force get us back to our best of the best entry, guys. So when we're looking at our 5-1, everything is going to say up. The triggers are going to be up. Your areas are going to be blue. Your mid-band's going to be green. And you're going to have nothing but up bars on the 5-1. This is the point where you're going to make the decision. It's time to look for a trade. My rules are met. It's time to look for an entry. The rules say that you are going to buy or sell, in this case buy, a pullback at an area inside of favorable large triggers. And I'm writing this in the room right now, guys, because the language is important. We're going to use a limit order to buy a pullback at an area inside of favorable large triggers. That means that we're going to let the market come to us. A pullback is a small retracement in price counter to the underlying trend. Guys, remember, everything on the 13.2 says up. Everything on the 13.2 says we have a clear path. A pullback is this little bit of up when this chart says everything is going down. Or a pullback will be a little bit of down when everything on the other chart says that we're going up. So guys, a pullback begins with a reversal bar. A red bar after all of these green bars. And I'm going to create a window of opportunity. I'm going to identify that area where the market is likely to continue. I'm going to look at my large triggers. They should be strong. They should be wide, one on top of the other, angled in the direction of the trend. And I'm going to look for the areas that will fall inside as price comes back. Places where trades begin, guys. Trades originate from fibs, mid-bands, or one-to-ones. We use these areas because this is like throwing a tennis ball up against a wall. It gives us a backdrop for that price to continue from. So fibs, mid-bands, one-to-ones. My window of opportunity extends for a long from the highest point of support. We are still 0323, Carl. I believe the second Friday. John actually talked about that this morning. Someone was asking the question. And let me find that answer for you. But I believe it's the second Friday of the month when those roll. There we go. The ES rolls on the second Friday. So on the 10th, we're going to go to the June contract. On the 10th, we will roll to that June contract. Awesome. Great question. So guys, window of opportunity from the highest point of support to the lowest point of support. That becomes the area where the market is likely to continue. You're going to right-click on your chart, and you're going to activate a limit order right at the top of that window. Is everybody comfortable so far? If price pulls back to your window from that highest point of support to the lowest point of support, you're in a long trade. You're in a long trade with the advantage of momentum. You're in a long trade with the advantage of a clear path. You're in a long trade with an entry at the area where the market is likely to continue. Guys, isn't that our equation 100% for new users? For brand new users, you've taken a trade based on your ability to read charts. And now you're long. Your initial stop, your protective stop, guys, you'll put them in typically 12 to 14 ticks, and you'll adjust it outside of that window of opportunity, that place where the market shouldn't go. Because if it does go outside of the window of opportunity, probably not a trade that you want to be in anymore. You've lost the advantage of the market continuing from its most likely spot. Once that market begins to move in the direction of the trade, you can reduce your risk even more because you waited for that pullback. Your risk is less because you waited for that pullback. Your profits increased. Guys, this is your high probability trend trade. And when we talk about the window of opportunity, I think that this is important to note. You're going to identify where your trigger lines are first, right? Where is the top of those trigger lines? Where is the bottom of those trigger lines? That's not your window. Your window are those areas that fall within. So the trigger lines may create a bigger scenario, but your window is coming from those areas. You'll notice that it overruns the mid-band, but it smacks into the fib, and that's the continuation point, guys. Your initial stop below the window, when the market moves in the direction, you can reduce your risk. Give me a Y in the room if you're with me, guys. Everything says up. Wait for a reversal bar. When you get the reversal bar, create the window. Your limit order goes right at the top of the window. Guys, I'll take this trade 1,000 out of 1,000 times. If I ever miss this trade, I'm disappointed in myself, because my plan says that every time I have those advantages, momentum, clear path, and entry, that I need to take this trade, because this is a trade that wins more than it loses. New users, you're going to get nervous that it's not going to make that window because you don't have the trust yet. You haven't established the trust. You may get in a little early. Has anyone ever done this? I've done it. What's that do? That increases your risk, doesn't it? And it reduces your profit potential. So we're developing trust in that first 30 days, trust in the rules. Guys, some people are saying, well, I'll just let it go in the direction of the trade. You've increased your risk. You've reduced your profit potential. I say it in the room every day. Guys, great entries create very manageable trades. Great entries create small losers and large winners. Great entries should be your focus. Finding that window of opportunity, guys. And I've got a couple of them here for you. Everything says down. Here's a reversal bar. The market continues from the area inside the favorable large triggers. We see it the other way. Everything says up. Rules met on the 13-2. Do you see how the market pulls right back to support inside of favorable large triggers? There's one of those circles that we put on earlier. Isn't it funny, when this was happening, I circled where the market was likely to continue, and sure enough it did. The market moves up. Does everybody see the weakening of the triggers? Does everyone see how the small trigger lines work their way inside of the large trigger lines? Everything says up. We have a clear path, but we don't have momentum. What's happening on the 5-1 chart? 1, 2, 3. Well, there's 4 divergences. Do you see how the small chart helped identify change on the large chart? Your ability to manage will be dependent on your ability to read the charts. So we're only going to focus on entries initially. Let's go back and see if this circle gave us an opportunity. That was at 747. Guys, small triggers above the large triggers. Large triggers are wide. They're angled in the direction of the trend. Look at the split on these two trigger lines, guys. When I talk about favorable large triggers on the 5-1, we're talking about trigger lines that are overlapped, one on top of the other, making sure that your window of opportunity is very small and concise to reduce risk. This is your best look, guys. This is the ideal look. This is the look that's going to give you your highest chance of success. Sometimes those trigger lines are going to be split just like this, which means that you're not sure. Is the market going to pull back to the large? Is the market going to pull back to the synthetic? It creates a very damaging window of opportunity. So we're going to look for the opportunities when those trigger lines are trending one on top of the other. And sometimes it's just not your trade. Would you guys like to do an entry together? You see it over here? Strong trigger lines, no termination conditions. Look at where those circles end up on my 5-1. There's a pullback, and it's directly to support, and that support is inside of favorable large triggers. From the top of the triggers to the bottom of the triggers. Is everybody comfortable with that? We've identified our trigger lines. And then if I whittle it down, if I take that box and go from the highest point of support to the lowest point of support, guys, this is the area where the market is likely to continue. Give me a Y in the room if you see it. The rules are met on the 13-2, from the top of the triggers to the bottom of the triggers, and then refine it even more to that highest point of support to that lowest point of support. Scroll over just a little bit. We had a second circle. If I use that box again from the highest point of the triggers to the lowest point of the triggers, that highest point of support to the lowest point of support, once again we have a window of opportunity. Two very different looks though, right? The 5-1 has no divergence. The 5-1 has strong triggers, and that window of opportunity is clearly defined. Here we're beginning to lose momentum. We see it with divergence. We also see it with the triggers, and it pushes. And then we get that second loss of momentum, those trigger lines inside. Do you see how the market pushes lower? If you took this long trade, this was your opportunity to manage out with a small loss, or maybe no loss at all. But if you took the first trade, you could begin to identify that slowdown. Guys, your job as a brand new user is to simply scroll back. And if you see odds favorable momentum, circle a tail. And if that tail lines up with an area of resistance inside of favorable large triggers, guys, you know that you have the rules met, right? So I want you to start taking these pictures. I want you to start recognizing when the rules are true. Take a picture of the charts when you scroll back, when you do this study. I have odds favorable momentum. Rule one is met. Write it on the chart. No term. Rule 2 is met. Area for entry inside of favorable large triggers. Guys, this is a rules-based high probability trend trade. Is everybody comfortable with what we're looking at here? Hey, Fulgore688. Absolutely. Post some in here. Get in the habit. I love it. And I think anything that you see is relevant. And I like that you're writing on the charts, guys. Make sure that you're writing on the charts. Make sure that you're telling me what you see. These pictures are great. And Fulgore, I'm going to call you Fulgore. I hope that's okay. Get in the habit of doing this all day, every day. You and I will have a conversation about everything that you see. We'll have a conversation about every trade that you take. And we'll always link it back to the rules. Guys, your path to success, the quickest path to success as a brand new user, is a very simple recipe that has been proven over and over and over. Post your trades in class. Everything you do, win, lose, or draw, post it in class. And take those pictures and put them into a spreadsheet. So we've already taken the picture, right? We've already taken the picture. Let's open up our spreadsheet. Let's share it to screencast. I know you guys are good at that. Share that picture to screencast, guys, and I want you to go to your spreadsheet. The spreadsheet is in your Nexgen study picks, and every time the rules are met, I want you to put it into your favorite trader looks. It doesn't have to be your trade. It could be someone else's trade. Call it the perfect trend trade short. Guys, I have 107 examples of high probability rules met trend trades in my spreadsheet. In your spreadsheet, Guys, this is the one from the website. This is the one that you downloaded when you got your software. You have almost 70 pictures of high probability trend trades. Are the rules met? Giving you the ability to recognize boy, they're testing me today, aren't they? It is a little bit. That's okay. Guys, you have this spreadsheet. You have 70 examples. Go back and look at each and every one of them. Study them. See what they look like. Start comparing what you do to what you see. Is everybody comfortable that this was a high probability trend trade? This is your best of the best look. Steal this picture, guys. Annotate your charts. Whoops. I only gave you the text on that one. Let me get that off there. Annotate your charts. Start the process of understanding what you're looking for through repetition. All right, let's do this. One more, and then we're going to go live market after this, guys. All right, give me a Y in the room. We're going to go through. We're going to enter a trade together, guys. Do I have odds favorable momentum on the 13-2? What do you say? Smalls below the large. New users, I want to hear from you on this one. Using the most current bar, smalls are below the large are wide, they're angled in the direction of the trend. Rule number one's been met, right? We have the advantage of odds favorable momentum. I love that because I know that the market is likely to continue in the direction of the trend. Guys, this most current bar has not smacked into support one-to-ones. Can we all agree that there's no termination conditions present? I have the advantage of a clear path and I have the advantage of momentum. Here's the look on my 5-1, guys. I've got down bars, I've got triggers working their way down, and I'm just going to start looking. I've made the decision that I need to find an entry because my rules are met. And the market's moving down, and the triggers are moving down. And in my brain, I'm going, oh no, it's going to go without me, and I'm never going to get paid, and my kids won't get to go to college, and what am I going to do? Guys, what am I waiting for on this 5-1? The crowd says we're going down, right? The crowd tells me that we have odds favorable. The crowd tells me there's nothing in the way. Guys, we're going to wait for those yahoos to push back. What's it look like? Waiting for I'm looking for a very specific word, a reversal bar, right? I'm waiting for an up bar after all of those down bars, and there it is. So at the time of this up bar, let's create our window of opportunity, guys. From the bottom of the triggers to the top of the triggers. So far, so good? Where's our lowest point of resistance inside of the favorable large triggers, guys? What's the lowest point of resistance? Fibs, mid bands, or one-to-ones? What do you see? Can I assume nobody sees anything? Thank you, Bobby T. Bobby T sees a mid band. So I'm going to take that box and I'm going to scrunch it up to the mid band. And then do I have any areas of resistance above it? I don't, do I? So guys, there's my window of opportunity. What do you think? Not so bad, right? How about if I take a horizontal line and a couple ticks below that window? I wait and see if we can get into a trade. The market pulls back, the mid band comes down, they're on a collision course. Guys, I'm in a short trade. I'm in a short trade with the advantage of momentum. I'm in a short trade with the advantage of no termination conditions. I'm in a short trade having entered the market at the area where it's most likely to continue. Give me a Y in the room if you're with me, guys. This is a bar by bar practice that you can do to get great at these entries. And great entries create manageable trades, right? We're in. Here's our initial stop. Outside of those large triggers, it's about 12 ticks. And then we get a reversal bar in the direction of the trade. Guys, now my risk is about 3 or 4 ticks above that reversal bar. If we're in at 51, by the second bar, we're already up $100 and can take profits, maybe move our stop to break even. And that market just continues down. And at 31, you're already $200 into this trade with the advantage of momentum, with the advantage of no termination conditions, and with the advantage of an entry where the market is likely to continue. Guys, your job is to study those looks. Your job is to go back and be able to get those best of the best entries, to create a simple plan for yourself. Defining your entry point, defining the conditions. Guys, this example plan is designed for new users. It's 100% remedial. It's going after the best of the best entries. It's using a checklist to verify that you actually have it. And it's reminding you that you need to take pictures every day, guys. 15 pictures in class a day is 300 pictures a month. At the end of 90 days of study, guys, you could have 1,000 pictures of high probability trend trades, of patterns that you recognize. I just put that example plan in the room for you guys. I want you to read over it. Let me know if you have any questions. I put a high probability trend trade checklist in the room for you guys. Here's your rules. Print this out. Put it on your desktop. Make sure that everything that you do is following rules. And I also gave you one more, guys. Here's the same rules and what they look like straight out of the manual so that you can study every trade, that you can go back and you can begin to police yourself. New users, that's our first hour. Our first hour is dedicated to making sure that you understand how to recognize the absolute best of the best, making sure that you understand how to recognize termination conditions. Guys, price reaches support and absolutely no trigger lines break through that area. Are we looking for short trades at this midband? Right there at the large triggers? What do you think? Absolutely not. And guys, what you're seeing here is what we call the gap theory. When price accelerates away from those large triggers fast and hard, and the large triggers don't follow along, they remain more than a full bar away, guys, more often than not, price is going to close that gap to the large triggers, which means that any trades in between those large triggers in that area typically aren't going to work out. This isn't an entry for a long. This isn't a way to pick the short from the higher area. What this becomes is an opportunity for you to recognize a pattern. When price accelerates away from those large triggers into an area, and the large triggers remain above the reversal bar or below the reversal bar, guys, this is your indication just to sit on your hands and let price do what it's going to do. And the gap theory is going to keep you out of troublesome trades. When you have that gap theory as it accelerates back, it's going to help keep you out of this short trade. It's going to keep you out of that loser and keep you focused on the winners. So what we're doing right now, guys, on the 13.2, price reaches support, absolutely no trigger lines break through, not looking for short trades. Price reaches a divergence high, absolutely no trigger lines break through. Give me a Y in the room if you recognize that as a termination condition, as a reason not to take this long. 90% of what you guys do is going to be reading your indicators. This is going to bug you adrenaline junkies, isn't it? But doesn't it make sense to have an advantage, to have the advantage of momentum, to have the advantage of no termination conditions, to have the advantage of an entry where the market is likely to continue? Guys, these three advantages work together in symphony. And if you decide to give away one of those advantages, well, then you no longer have a high probability trend trade. And it may be a medium probability trade. It may be a trade that you get to next week, next month. But it's going to be your ability to read your charts. They're going to give you that advantage. So guys, this is very much a sit on your hands, go make a sandwich kind of pattern. I don't have a clear path, nor do I have momentum. I know that I shouldn't fight the overall trend and try to go long when it's red. My smalls are below the large, so I don't have momentum up. I just had one of those pivot stop outs. Do you guys see it? D, this is a great example. The buyers are in control and the sellers push them back, right? All the way back to support. Guys, institutional traders know where these levels are. So do you now. Congratulations, you have an advantage. And they let them push it all the way back. Look at that, D. 2 ticks, right? Trigger lines don't follow. I love it. Everything that we do revolves around patterns. There's that gap theory again. Price pulls all the way back to the mid-band, all the way back to support. Large triggers don't follow, and now it retests resistance. The trigger lines remain below. You guys want to see something absolutely amazing? This is the S&P. This is today, right now, live in the S&P. This is crude oil. Resistance reached, pulls all the way back to support, retest the areas. Trigger lines don't follow along. Guys, this was taken in 2021. This was taken at 10:01. So what you're going to do is you're going to begin to recognize these patterns, the advantages they present, and you'll be able to understand when it's safe to go long, when it's safe to go short. D, we didn't have a divergence here, but doesn't this look like a pivot stop out at resistance? Now we're waiting for a reversal. Pretty cool, right? If this is really going to be a top, these triggers are going to roll, aren't they? Well, they're starting to. So now we're just waiting. We're waiting for those advantages of momentum. We're waiting for those advantages of no termination conditions. We're waiting for that clear path. And guys, if you're Jerry S. that's been with us for 7 or 8 years, you'll be able to take advantage of termination conditions. You'll be able to take advantage of that trigger roll and put yourself in a position to start making money in more creative ways. But it all stems from your ability to keep it simple initially. Jerry, would you agree that once you learn to read your charts, anything is possible? Guys, Jerry's been with us a long time. But you have to take a second and understand those advantages, guys. You have to be able to read your charts to take advantage of the information that they're giving you. Whoops, I just went to my untitled workspace. And then here we are on crude oil, right? Termination condition up top, termination condition below. We're just waiting, guys, waiting for that absolute best of the best. I'm going to take a quick little break. I want you guys to take a picture. Folgor, I know you're new in here. You've posted a lot of pictures. The second hour is when I start looking at your pictures, guys. The second hour is when we start looking at what you're doing, your chart reading. We're going to spend a lot of time in the live charts today talking about what we see in the moment. But I'm going to give you a few minutes. Take pictures of what you see. Guys, this is a great opportunity for you to take a picture of a 13-2 chart. Identify your termination conditions. Write gap theory. Begin the process of understanding what you see through annotation. I'll be back in just a minute. We'll get going on that second hour. Back. Paul says it's a pretty boring market. And you found a rules not met trade. Guys, that happens, doesn't it? Why do we trade rules? Because they create advantages. You have to be prepared that 90% of what you do is just going to be waiting for those advantages, guys. I can't stress that enough. Our rules kept us out of a loser here. Our rules also kept us out of a loser here. How much money does it cost to be flat? Not a thing, right? Good. I hope everybody's waiting. What do we see now, guys? Termination, right? We're waiting for that roll. We're waiting for that odds favorable momentum. We're looking to clear a path. If then. That's all we're doing. If then. If my advantages are present, then I'll take a trade. I'm going to scroll up. Let's look at some of your pictures. While we wait for the market to do what the market's going to do, let's see what's happening. Gary says termination condition. No trade, right? Take a picture even if you don't take a trade. Excuse me, goodness. That's the same picture though, isn't it? No worries. Carl, let's see what you did. Carl F came in. He says trade or no trade. Termination condition. What do you think? Carl, I say rule number 2 wasn't met, therefore no trade. I only have 2 options, right? Either my rules are met or they are not. 13.2, termination condition. Termination condition. No trade. Gary's talking himself into stuff, right? Gary says, I could break my rules. Isn't this dangerous? Termination area, no trade per rules. But here's what I could do if I broke my rules. Gary, you're putting that little devil on your shoulder, saying, man, break your rules. Imagine how successful you could be. Break your rules. You'll be popular. And then Ron taking this approach, when I have odds favorable momentum and a clear path, I'll get in and get out. Then go in a little counter trend there, Ron. I'm going to say that one's aggressive even for you, but I see what you did there. And then Gary, there's that one. Termination condition. Could reverse off support, but no rules. Look at that. Gary, I love what you did here. No rules met, but what if I did? No rules met, but man, maybe this one will work instead. Look at that. That one gave you a reversal bar, and then just you got stopped out, and now you're saying, well, maybe this one, right? I'm not saying that's what you were doing, Gary, but this is a great lesson. If your rules aren't met, be okay. Like if your rules aren't met, be okay with not taking a trade. Don't try to convince yourself how breaking your rules would have been advantageous, because eventually you're going to believe yourself. Gary, we're talking about what you wrote, not the chart here. And guys, you can do whatever you want. Let me be very clear about that. I'm not here to police you. I'm here for you to tell me what your rules are. But when I see something like this, and you said no rules, and I love it, I find for me personally that there's only 2 options, right? There's rules met, rules not met. I don't care about ifs, buts, what could have. Just staying in the moment with my rules, guys. Focusing on the absolute best of the best, focusing on the advantages, focusing on what's going to make me successful. And if your rules are met, take the trade. If your rules aren't met and you don't take the trade and it runs 50 points in the direction, you have to be okay with that, right? Fulgor, I love it. Posting pictures. I love that Jim told you to post pictures. Let's just look at your chart. Let me see where everything is here. Odds favorable momentum. Didn't have termination conditions. It doesn't look like we got a pullback to support inside of favorable large triggers over here. But do you see it right there? Fulgor, there's a pullback to support right inside of those large triggers. Potential opportunity. Pretty cool. You're taking awesome pictures. You didn't even know it. That was your target. That was your entry. That was your stop loss. So Fulgor, and I know that this is only a 5-1. Do you see where it pulls back to support right there inside of favorable large triggers? The difference in price is almost $100 plus per contract. The difference in risk is substantial, and the difference in profit potential is exponential. That rule 3, those great entries give you manageable trades, and those manageable trades ultimately give you higher profits. Great picture. It was based on the risk to reward of 1 to 3. Okay. So Fulgor, I like that. 1 to 2, that's your risk to reward. But isn't your risk right at an area of support inside of favorable large triggers? Do you see that? Your stop is sitting right at a potential entry, isn't it? So I like a 1 to 2 risk to reward, but I like it even more when it's based around something. Stops, rather than just being a number, when you put them where the market shouldn't go. And let's do some entries, because I think that there's some great lessons on this right here. And I know that you're brand new, and I don't want you to think that I'm picking, because I'm not. But if you enter here, if you enter here, your stop based on that ratio is at support inside of favorable large triggers. But if you enter down here, your stop goes where the market shouldn't. Does that make sense? If you enter down here, your stop is still up here. But if you get that best of the best entry, and this is, and you will, and it takes practice. It really does. But if you go back every day and you take this picture that we did together as a classroom, you begin to trust those entries. You begin to see it happen over and over and over again. And it makes it easier. And if you go to the spreadsheet and you start clicking on random pictures from the best to the best, you'll start seeing those entries at mid bands. You'll start seeing those opportunities. And what it does is it just kind of cements the belief, right? It cements the belief that when you have the rules met, when you have that odds favorable, and of course this one's going to be slow, when you have no termination conditions, that best of the best entry makes everything manageable. Awesome. I don't recognize the insignia. I'm not sure which branch you were in, but thank you for that. All my Rogers and my 5x5s, those are all my military guys. So we're just going to keep working. Fulgor every day. Getting a little bit better, seeing it a little bit clearer, a little more understanding until we get to the point to where it gets easy, right? Entries up here. I see what you're doing. And you're identifying the momentum you're going through. You're creating a great plan for yourself that revolves around it. We've reached support. We've reached support. Let's see what that says. Loading for trade and live data feed. Red background, both charts, but reversal bar on the 5-1, 157 line. Waiting for trend change to downtrend, but I believe we're too far from any resistance, therefore not a good trade opportunity. So Folger, watch this. We can change the language on that. Oh, you're doing great. The first day, the first week, I think it even shows up. There's your first day, first couple days, Folger. There's a lot of information, a lot of terminology coming at you. What happens, though, is it gets easier and easier. And remember our talk on rule number 2? Price reaches an area of support, absolutely no trigger lines break through. We can identify that as an area likely to stop the market. Absolutely. If nothing else, I'm going to save your fingers some work. Everything that you wrote here, watch this. Rule 2 is not met. You no longer have the advantage of a clear path, which means until that area breaks, you can sit on your hands and not wonder if, right? So rule number 2 gives you that opportunity. And guys, this is why I love chart annotation. I don't care if you're in a trade or not. You don't have to be in a trade to take a picture. But the more you write on a chart, the more times you go through identifying what you see, the easier it becomes. You're creating that repetition. You're creating that confidence. You're creating that ability to see it in the moment, that chart reading, so you can take advantage. Great pictures. And I love this. Day 1, and you're already 4 or 5 pictures in. Do that every day. The guy that posted this one, Gary, he gives us some of the absolute best pictures. Chart reading all day long. Even when his rules aren't met, Gary takes pictures and annotates. This is what I see. This is what I'm looking at. This is why I'm not trading. This is why I am trading. Here's my checklist to help me identify that I'm being consistent with my rules. Gary, I'm going to put you on a pedestal for a second. If you go through this much work, guys, to identify what you're seeing, whether or not your rules are met, I'm convinced it'll be darn near impossible for you not to get to where you want to be. Large triggers are flat, small triggers are flat, no trades, no momentum anywhere. Folger, great read. I'm not sure what your 13-2 chart was doing. I love the 2-chart approach, but you're recognizing that there's not a darn thing on your 5-1 giving any advantages. Nice job. Paul M. Small's not through the area yet. It is a termination condition, right? Paul, are you with me? A lot of great information on this chart. So the first thing that I really like about this chart, well, it looks like you went short here at the termination condition. Pretty aggressive, right? Everything says up and you went short. That's a lot of faith in a little red line. Wouldn't you agree? But I know that you got a plan. I know you're looking at what you're doing. You're using MACDs. You're watching the stuff go. On something this aggressive, it's all right to let that midband be your first target. Make a little money on it. If you're going to be aggressive in, aggressive out, right, Paul? And guys, when you learn to read your indicators, you're going to take trades beyond that high probability trend trade. I love it. This is a divergence, pivot stop out. But I think that midband should have been your first target. Second divergence prints, and now you're going short right at that area of support. If you let that area clear, it creates an advantage. But more importantly, Paul, you're getting into that first, right? That's 3 short trades. Small winner, loser, and then you get the good one. I'm going to show you guys a picture. I love this picture. Let me see if I can find it here real quick. Please ignore the awkward silence. Here we go. You ready? For those of you guys that want to get in at the top, that want to get in at the bottom. And this is a good example, Paul, of what you were doing. Price reaches resistance, guys, and this is the I think resistance will hold trade. If you get in aggressively at that resistance, you've got to get out aggressively when all of your triggers are still up, right? Because all the momentum is still up, the direction is still up, everything is still flowing to the upside. And what I see a lot of times is people go, but it's a red line, it's a termination condition, I'm going to go short. They don't manage it well and they get stopped out, and they try it again and they don't manage it well and they get stopped out, and they try it again and they don't manage it well and they get stopped out. And they're like, son of a gun, I keep throwing away money hoping that this area, thinking that this area is going to hold. If this area is really going to be a top, if those triggers are really going to roll, or if it's really going to cause a reversal, these triggers are going to roll. And do you see how this price where that first attempt is made is the exact same price when your trigger lines are telling you that it has a chance to win? That now you have the advantage of momentum, direction, the triggers are going, and this one becomes pretty effortless. And that's just it. It's not about the excitement. And it's that being patient. It's that eliminating the 3 or 4 losers of opinion and waiting for the absolute best of the best that's going to show the biggest impact on your P&L. So take your one shot, right? If you need to take that one shot, but then when those triggers roll, that's where the advantage really comes in. Great picture, Paul. I appreciate you posting it. New trader, everything says up, nothing is in the way. You identify where the market is likely to continue. And what a beautiful opportunity to take a long trade and make some money. New trader, picture perfect. Paul, termination condition, right? Pulls all the way back to support. Large triggers don't follow. Taking advantage of the gap theory, Paul. Guys, remember when we talked about this as it was happening? Price pulls all the way back to support. The large triggers don't follow. It's likely to close the gap. Well, Paul decided to get paid on that gap theory. Notice that the large triggers are still up. And Paul, I think that this is the key to success on that one. If everything turns and pushes against you, you definitely lose that advantage. Nice trade. Great chart reading. Beautiful chart reading. And Paul M again. Smalls have cleared, the large have not. You take a sawtail, waited until big bands, wasn't sure, so just put a trailing stop. Yeah, you kind of made something up here. You're taking advantage of the overall trend. You're taking advantage of that momentum. You're taking advantage of the smalls getting through the area, and then you're out at the next area. Just a quick little momentum. Jump in, make a little money. Seeing a lot of traders take that one lately. Mid-band, outside of the large. I agree, Gary. You're waiting for it to break, right? But you had odds favorable. You had a 50-50. You had a potential entry. The mid-band's outside, but your large triggers are right there, aren't they? Gary, do you see it? That support's still right there at the large triggers. Fibs, mid-bands, and support. And one-to-ones, guys. Give me just 1 second. I'll be right back. All right, sorry about that. Now we're back. You're saying goodbye, Ziba? Are we? Oh, I'm saying goodbye. Yes. You have me figured out now, don't you? I will never miss an opportunity to say goodbye to my wife. I like you guys a lot, but she signed on to stay with me for the duration. Paul, let's see what you did. Nothing in the way. Triggers back outside. Paul says, you know what? I'm going to take this one. We'll see how that one turned out for you guys. Dave B. 50-50 trade, right? You took the entry on the 50-50 because of the momentum, because everything said up, kept your stop in place, were able to get paid. And then Dave B, you get divergence, and you exit right at the area of support, right there by the large triggers. One thing that you may want to do, Dave B, I like the way you trade a lot. If you're going to use that 21.3, if you're going to have those areas, if you're going to have weak triggers at those areas, maybe be okay to exit and re-entry, right? Maybe be okay to say, hey, I got divergence on all my charts. I'm losing momentum a little bit. There's a good chance this may push back to those support levels. I'm going to take some money up top, and then I'll just re-enter if the market gives me an opportunity. Remember, we're in this to make money, right? And Gary didn't want to get in at that area of support. Bottom line, no rules met, no trade. Ziva, why was it 50-50? I'm sorry, I didn't see your question in time. It was 50-50 because the small triggers had broken through, but the large triggers had not at the time of this pullback. Looking for Dave B's. There we go. The smalls are through, but the large are not. Do you see it, Ziba? Okay. Third target was 40.82. Break even below the large triggers. Right on, Dave B. I know you have a plan. And then Paul got your entry. Wish you knew this fib would stop it because you have your crystal ball. Made you earn it. The rules were met. Smalls outside of the large, smalls outside of the large. That one divergence says, well, it might push a little lower, right? Paul, you could identify that area of support. Guys, let's talk termination conditions. If price reaches this area of support, we're only looking at the 13.2, right? If price reaches this area of support, don't we go through the process, where are my trigger lines? All of the trigger lines remain above the area of support. Don't our rules say this area is likely to stop the market? This is an area where the market, this little pullback, may not be able to go any further. So Paul takes that knowledge, smalls outside of the large, clear path above, everything says go. If it pulls back to support and everything on every chart says up, Paul's willing to put some money on it. And faith in the fibs is huge, right? Paul having that faith, but also understanding when those fibs are likely to break and when they're likely to hold. That same faith that helps you get long, guys, has to keep you from getting long right here, right? That same faith has to keep you out of trouble as much as it gets you into opportunity. And that's chart reading. And now we have smalls on crude above the large are through. Guys, this is an area with the potential to break, but it has not broken yet. Is everybody comfortable with that? Odds favorable, smalls are through, large are not. If we get a reversal bar on our 5-1, right now, there's the top of my triggers, there's the bottom of my triggers, there's my lowest point of support, there's my highest point of support. If I got a reversal bar right now on crude oil, could we identify a window of opportunity on a medium probability trade? A trade where one issue exists. That issue is an area of resistance that hasn't completely broken, but certainly has the potential to with the odds favorable momentum. Give me a Y in the room if you're with me, guys. I didn't even get a reversal bar yet. So my job would be to right click and wait for the market to come back to me. That's it. It is, Ziba. This is a 50-50 trade. This is a trade that has the potential to break the area because of the momentum. But until those large triggers get above, we don't consider that area broken yet. That's not an indicator. That's from our lesson earlier. So we've identified momentum. We've identified the area. Can we identify where the market is likely to go if we get a pullback? That's okay, Ziba. Where were you entering the market? Did you take a long right here at support inside of favorable large triggers? Or maybe a different market? Show me your picture. Guys, don't these large triggers up? Sometimes we get a trade, sometimes we don't, guys. Now I have a clear path. It's not even 50-50 anymore, is it? The larger above, the smaller above the large, we haven't reached an area. Guys, this is a textbook 100% high probability scenario. Give me a Y in the room if you see it. Can we take the picture? This is what we call a pre-trade picture. Let's annotate. I have odds favorable momentum, right? I have no termination conditions. Areas inside of favorable large triggers. 100%. This is a pre-trade pick. Well, I didn't even have to do that, did I? Ziva, perfect. Odds favorable, no termination conditions. You're a little bit below those areas of support though, aren't you? So the rules say, let's be a tick or two above the highest point of support. Awesome. So we're just waiting, right? So new trader, from the highest triggers to the lowest triggers. Initially, we had it here. I went and did some lessons. Those one-to-ones were there. That's a tougher trade to take. But aren't those one-to-ones in the window of opportunity? Market played some shenanigans here on you guys a little bit. That's a tougher entry. We were waiting for it down here. After the fact, it's easy to say, well, yeah, absolutely. There's that smalls above, large above. It pulls back to support. There's three divergences in the same general location, isn't it? Probably. The white and yellow bars on the right. Okay. So Paul M., this is a reversal bar marker. At 40.7150, if this bar reaches that price, it goes from being an up bar to being the first reversal bar that we see, that down bar. And then the same thing is here. If this bar comes down to 40.7350, well, then we'll see a reversal bar. So let's see if we can get it to happen on one of these. The way we'll use it on the 13.2 very often is that gap theory. When we come back, that reversal bar marker would have been right here, and the large triggers remained above it. Lets us identify that distance, same way you did. So what we're waiting for right now, this is where that reversal bar will happen, if it's going to happen. This is where it'll happen on a smaller, faster chart. Does that make sense? So we're in a holding pattern, right? We have momentum up. We have a clear path, but our smaller, faster chart is telling us that the market may push lower. Give me a Y in the room, guys. This is just chart reading 101. Even when the rules are met, a smaller, faster chart can help us identify change. So D, right now, when there is the potential for divergence, we don't have it yet, right? Because in order for divergence to be true, that number is going to print along with the divergence line. So right now, we have the potential for divergence. Don't get caught up on the number, D. This just lets you know that divergence may happen. Same thing right here. This negative number lets me know that divergence may happen if the rules are met. We don't trade potential, guys. You may get a move all the way up. You may get a move that goes 100 points with the potential for divergence the whole way up. But until it's true, it's not true. John Novak always makes the joke, divergence is like being pregnant. You either are or you are not. Divergence either is or it is not. So guys, we have odds favorable. We are one tick away from a key area. Oh, there it is. He was typing it. What do you think, guys? One tick. John Novak, one tick away from a fib. Do you consider that in the area? Not watching live. Guys, we are one tick away from this key area, which means technically we haven't reached it, right? Which means that technically it's a rules-based trade. Our stop goes below where the market shouldn't, right? This is a horrible entry because I'm late. But do you see how it pulls right back to the window of opportunity? Because of momentum, we can identify where the market is likely to go. Because of our window of opportunity, we can identify where the market is likely to continue. If divergence prints, if divergence is true, well, then maybe things are changing. But in the moment, rules met. It should have been rules met from about 79.42, guys. You should already be, Jerry says 41. You should already be in a trade and collecting profits on your first target or getting close to that point. Give me a Y in the room if you see it. Odds favorable, didn't quite make the area, pulls back to the area of support inside of favorable large triggers. That's it, guys. Either the rules are met or they're not, right? And in this case, they most certainly were. Let me get all my drawing objects off of here. Show me your pictures when your trade is over, guys. Large chart leads the way. Large chart said momentum, right? Does it have to hit the, didn't hit the target yet? That's okay. Then manage your trade, Ziba. Large chart says up. Large chart says nothing in the way. Small chart said we may push back a little bit. And we're just kind of waiting for agreement, right? Paul, picture perfect entry. You go to the bottom of the window with divergence. Guys, notice how Paul takes pictures when he gets in, first target reach, talks about his management, puts himself in a position to go back and study these over and over. Hadn't hit the target yet, right? What does your 13.2 say? 13.2 says up. 13.2 says momentum. What do the 5-1 triggers say? They say up. They say up. Ziba, you missed your entry, didn't you? So Ziba, you missed your entry is what happened here. You should have been already in this market, wouldn't you say? And then it came back. Did it get you on the second time? Nope, because your order is below the area of support. Ziba, if this area of support is where the market is likely to continue, your entry belongs on the other side of it, doesn't it? Because this already happened. The rules say get your order a tick or two above the area. Ziba, you would have been in this trade with just putting your entry on the correct side, above the area. What you did there inadvertently is you tripped over pennies and you missed every dollar. And if you didn't get the first entry because you were a little late, guys, this is the market doing nice things for you, giving you that second one. You did. You put it between, right? So Ziba, what do the rules say? Let's go back through it. When we define our window of opportunity, so from the bottom of the triggers to the top of the triggers, from the highest point of support to the lowest point of support, your entry, Ziba, goes a tick or two above the highest point of support for a long. Does that make sense? You put your entry a tick below. And this is a great example of why we go above the area for longs and below the areas for shorts. Because remember that we don't control the market, guys. And Ziba, that one tick on the wrong side looks like it cost you a winner. So it's a great lesson, isn't it? Your first entry is at 41. Your stop keeps you safe. If you didn't get it, there's your second entry right there at 41 with the rules still met. And your first trouble spot is 79.55, so 14 ticks to it. It's already been hit and filled probably. That's it. But if you had entered at the mid-band, Gary, doesn't that mean that you were scared to get in at the top of the window? Technically, didn't you break your rules? Unless your rules say something else. So let's talk about why we get in at the top of the window. Why do we, whoops, that was the wrong one. Why do we get in at the top of the window? Gary, I'm not sure how you didn't have a rules-based trade there. I would say that your rules need review. Is there anything about these trigger lines, guys? Anything about these trigger lines that makes you feel as though that market's not going up? Odds favorable momentum, right? This is why we go to the top of the window, guys. Because I have odds favorable momentum and I have a market absolutely screaming with nothing in the way. Does that make sense? See if we can find a picture of a freight train. This is what that market's doing right now, guys. Odds favorable momentum, nothing in the way. Which means that with this much momentum and nothing in the way, guys, I'm taking it at the top every time, because how can I expect this market to push lower with that much going in that direction? Does that make sense? My stop will go where it shouldn't go, but guys, I will eat that 5 or 6 ticks and sit through it every time, because I'm not willing to miss that trade. Not with those advantages. Gary, you have odds favorable, no termination conditions. And you had odds favorable momentum on market flow. How is it not favorable, Gary? Because one bar printed with no rules met? And that's okay. If these are your rules, that's great. But I think that you're creating challenges with too much information. So Ziba, you don't have any fibs on your 13. That's a little concerning. But I like your entry if you're going to do it. 2 divergences, pull back to the area of support. That's a much better entry. But now we have 2 divergences, right? You lose more high probability trend trades than you win? Okay. So you're recognizing that you've given away the advantage of momentum on this trade. But your entry is perfect, which keeps it managed, right? And we'll see what happens. 13.2 says up. 13.2 says we haven't reached that key fib yet. There's a little bit of a fight. You're in at the best of the best spot. That's okay. So sometimes if we make a mistake on the first one, Ziba, it doesn't mean that the second one is still a great trade. But I like that you went from being in the wrong spot to being in the right spot, which means that you're using simulator for everything that we're supposed to use it for, to get those great lessons to come through and to understand. And then John says to get filled on a 100 lot, you're going to have to make sure to get in a couple ticks early so you're guaranteed fills. You can't get the last tick and be filled on many contracts, so many contracts. Stop being scared of going a few ticks past your entry. Amen. So Ziba, you got your reversal bar. If you took that third shot, guys, you've already had a reversal bar. You have your risk established. $100 target somewhere around 53. We can identify with Fibonacci where we're anticipating that market to go, right? Everything says up. Looking for it to catch that fib. Now, Ziba, if you get a third divergence, if a third divergence prints on your 5-1, doesn't 3 divergences in one location, same location, constitute a termination condition? So you're being aware? So Ziba, what you're telling me is that with the advantages on the 13.2, you took a picture-perfect entry on the 5-1, and you have a plan to manage it if divergence prints. You already have reduced risk. You know where your target should be. Isn't that crazy? Why'd you get out? Because it gets risky? Guys, I want you to both do this. Buck Blue and Ziba, do me a favor. Right-click on your chart, on your 13.2 chart, and go to Templates. And just reload the 13.2 template, guys, and see if it changes what you're looking at. Now you should be out. Now the stop's been hit, right? Ninja 8 versus Ninja 7, so there may not be the synthetics on there. Because this is a 21 fib, that's a 5-1 fib. Ninja 7 with a generic template, Ninja 8 with a generic template. That's okay. Ziba, don't losses happen? They happen. In Ziba, if you had taken the correct entry over here, no, it wasn't. You had a clear path. But Ziba, if you had taken the correct entry the first time or the second time, wouldn't you have already made money on that trade? Right? But you took the last ditch effort when your 5-1 was already slowing down. And that's exactly right. Thank you for saying that. You're focusing on your entries, right? Because entries reduce risk. Entries increase profit. So Ziba, now because you're a little more comfortable with your entry, that becomes an option for you, and that becomes an option for you. So if you're in at 42, Ziba, there's $100 profit right there in a break-even trade. Big difference, right? When you still had the advantages. So I think you're exactly where you need to be, Ziba. Good job. Great entries make manageable trades, guys. Great entries make manageable trades. Anything can happen, triggers, right? Loss of momentum. Loss of momentum. No areas inside of favorable large triggers. Is everybody comfortable with what we're looking at? No advantage of momentum. We've given away rule number 1. We're not in a market likely to continue in the direction. We have anything can happen. And just in case you didn't believe it, we had no entries inside of favorable large triggers. Rules kept you out of this loser. And guys, how cool is it that the CEO of the company comes in here to help you guys out? I think that's pretty awesome. Guys, give me a Y in the room if you're with me on this little bit of chart reading. Giving away the advantage of momentum. Giving away the advantage of momentum. Rule number 3 is not met. If you're only... Awesome. If you're only trading rules and your only option is that your rules are met or your rules aren't met, guys, congratulations, you just avoided a loser. Loss of momentum here, Ziba, that might have been a small loser, but that's okay. You're going to take small losers every now and then. Those great entries keep them small, though, don't they? And now what's happening? Well, we got into that area. We've reached support. The triggers are above. Nothing agrees. Awesome. So if nothing agrees, what do you think, guys? Should we take a trade and hope? Or should we wait for the rules to be met? Just wait, guys. So there's something that I do. I don't know if you guys are doing it. I hope you're doing it because I suggest that it might be a good idea every day. I have a high probability trend trade checklist, guys. This high probability trend trade checklist lets me know when my rules are met. And by that same token, it lets me know when my rules aren't met, right? And if I'm going off that, either my rules are met or they're not, guys, this does it for me. I want you to see something. And I'm going to blow this up and make it bigger. We're going to take just one, because it's all the same. You can print this out, put it on your desktop. Is the market coming from a good top or bottom? Is it coming from a termination condition that creates a full reversal? Sometimes that's going to be a no, right? This one increases the likelihood of success, but it's not mandatory. I put that on there for a reason, because you're going to get a lot of great trades without it coming from a termination condition. This one just ups the percentage a little bit. But we're looking at three simple things: odds favorable momentum, no termination conditions, area for entry inside of favorable large triggers. That's your basic, guys. That's your best of the best, right? New users, you're going to do this. You're going to start saying, well, I probably need 5-1 smalls, the right color, need 8 range chart, odds favorable momentum, need no 21-3 mid band on Tuesdays. And you're going to start adding all these conditions. I know without a fact or without a doubt that this is the recipe for winning more than I lose. This is the recipe, if I can follow this simple little protocol, that I'm typically going to win more than I lose, guys. Which means that I have to develop trust. Which means that if I take this trade 100 times, the odds are favorable that I'm going to win 70 of them. The odds are favorable that I'm going to lose 30 of them. Is everybody comfortable with that? 3 rules, 2 charts, best chance of success. It feels simple, doesn't it? Has anyone else started already? Mark, I need more charts. Mark, I need more indicators. Mark, I need more time frames. Mark, I need more rules. Because following 3 rules seems boring. Guys, there's a reason that I teach the 3 rules. Trust them. Keep it simple. Keep it on 2 charts. Give yourself the highest chance of success now so that you can branch out and you can do more with the software later. Sorry, that was my little preachy. I didn't mean to go sideways on you guys there. Right now I have a termination condition to the top. I have a termination condition to the bottom. Crude oil's in a holding pattern. John says you guys may be lying to yourself. If you're okay with losing 30%, you'll win 70% and be happy. It's the lie that you try to get rid of the 30% losers. It's a deep black hole that you'll never find the bottom of. It's true, guys. Being okay with the 30 comes from believing that the 70 is going to happen. Believing the 70 is going to happen comes from practice and repetition. The sooner you realize that you won't win every trade, that you accept that you won't win every trade, the sooner you'll start winning more trades. Because you won't trade not to lose, Ziba. You won't say, well, it's risky, I exited. What you will say is that I have every advantage. Wild dogs would have to tear me out of this position. If both large triggers are at your spot, you'll find the magical easiness. If your area is below the large triggers, you'll lose more than you win. It's so funny because we try so hard to keep it simple, i.e. mark circle on the chart. When the areas fall below, it's lower probability. Guys, we made it through that hour fast, didn't we? Holy smokes. So here's what's going to happen. I'm going to take a quick little break. I'm going to reload my water. Guys, I want you to take a picture of what you see on your chart. Go and back test it, report back tomorrow. Absolutely. Guys, I want you to take a picture of your 13-2 chart right now. And I want you to identify where those large triggers are in relationship to that reversal bar marker as price accelerates all the way to a termination condition. Guys, what are we talking about here? Does anyone remember the vacuum? Let's see if it closes that gap. I'll be back in just a minute. Let's see if patterns repeat themselves. I'll be back in just a second, guys. All right, here we go. Last hour. Hey, Fulgore, take care. Thanks for being here today. Oh my goodness gracious, great balls of fire, guys. When I walked away, I said, hey, here's a pattern that we can recognize. And there we go. Guys, welcome to the gap theory. That theory that states that price is likely to close the gap to the large triggers. Hopefully that was enough to keep you from trying a short trade. Gary, let's see what you did. Termination. No momentum. No momentum. That's too big. I can't read everything. No HVA. Gary, what would an HVA do for you there? With no rules met. Oh, you're saying no HVA trade. Never mind, Gary. I'm with you. That took me a second to process. Yeah. Triggers haven't rolled yet. I see. I thought you were saying no HVA at the blue line. I'm like, I don't understand. I'm with you now. You're saying no HVA trade. I think that's a great read, Gary. It took me a second to catch up with you there. It was such a good read. And then D, not coming from a good top or bottom. Don't have odds favorable momentum. Just nothing to do, right, D? That's it. No good top, no HVA thinking should never enter the mind. Great job, D. Great job, Gary. And guys, I think John Novak makes a pretty good point there. There's rules for everything that we teach, 100%. Focus on following them. Focus on understanding them. And I think that the key to following is understanding, right? So when we talk about a high probability trend trade, we've got the rules. And it's important that you understand what the rules are. That's the wordy version. It's important that you not only understand what the words say, right? But understanding what they mean. I have to have strong trigger lines. Well, then you have to know what they look like. And we talked about that with rule number 1. Termination's false. I need to know what that looks like. Entries, I need to know what that looks like. And if you don't understand a rule completely, that's okay. We'll talk about it, and we'll get you to the point to where you can. Paul, take care. Thanks for being here today. Great job showing people what you can do with the software after you've had it for a little bit and you begin to understand it. Guys, we knew that there were no short trades because of a pattern that we recognize. We're not taking long trades because the rules aren't met, right? What do we see on crude? Same thing. Price pulls all the way back to support, no trades. And now we're starting to break through these areas, guys. Those same key areas we were looking to get to, it just didn't get there. So keep it simple. Keep it focused. Your path. Absolutely. All right, new trader. Right here, it's 79.44 is the price at which this bar becomes a reversal bar. It's just called a reversal bar marker. On that same token, 79.59 is when this bar becomes a reversal bar. That's all it is it gives you that price at where that reversal bar will happen. So if you're waiting for a reversal bar on your 5-1, you know exactly where that reversal bar is going to form. This means that there is the potential for divergence, Safia. It means that if the conditions are met, then divergence is possible. But like I was telling somebody earlier, you may get a 100-point move in one direction, Safia, with divergence potential the whole time. So until it prints, until we get that actual number solid and standing still, until you get that divergence line, it's just potential. I've got the potential to win the lotto every time I go to the corner store and buy a ticket. But until I win it, I'm not going out buying Bugattis with the money. So see how it's still potential, right? And the market's going up. We didn't get it on any of those. Yeah. Market's starting to go up. The smalls are trying to break above, right? We're just waiting. We're in a holding pattern. We're waiting for everything to line up to give us an advantage, guys. So there's this path to becoming a confident trader ASAP, guys, and it's the most simple approach. It's the path of least resistance. Post your trades in class every day, guys. Every time you take a trade, share it with me. Write your rules on that chart so that I know what it is that you're looking for. If you just take trades and you never tell me what you're looking for, I have to assume that you're looking for a high probability trend trade. I have to assume that you're looking for these rules to be met. If you're not, or maybe you had a different line of thinking, guys, write it on the chart. We'll talk about it. I'm not here to judge your trading plan. I'm here to help you read indicators. So if I know what you're looking for, I can help you understand whether or not your rules were met. Annotate your charts. Get them in the room. And then use that spreadsheet, guys. Is there anyone in the room that can't find their spreadsheet? Look in the Nexgen Study Picks folder. It's there. Does everybody know where their spreadsheet's at? Because that's the second half to becoming a confident trader ASAP. Everybody has it? Good. Did you know that there's 70 pictures of high probability trend trades to help burn that image into your mind? 70 pictures of high probability trend trades that I've stolen from this class to help you burn that into your mind so you know exactly what it is that you're looking for, guys. Learn the trigger line and Fibonacci rules for when it's okay to trade and simulate your trades daily. Post pictures in class until you're sure you have the correct rules. Don't practice the wrong trades. Don't play. Don't mess around. Create that muscle memory. If you're trying to get your golf swing down, going out there doing the Happy Gilmore hockey slap's not going to help your game at all. Simplify your trades and your plan. Notice that even the path says simplify. What looks will you commit to? Learn the looks so that they become easy, so that they become repeatable, so that you never hesitate. That comes through practice. That comes through study. After class, before the next day, guys, download the replay data for the current day that you've traded. Go back and retrade it. Fix the mistakes you make. Take the trades that you skip. Skip the trades that you shouldn't have taken. Guys, I market replay every weekend. Every weekend I pick at least 2 days from the week where I know I made a mistake. And I make mistakes. We all do. And I go back and I replay it. And I insist on being more successful. Take pictures of the correct trades, whether it's live, whether it's going back in time. I got that message once, Zeba, and then I closed out, reopened, and I didn't get the message. I got the exact same message this weekend, and I just tried it again a few minutes later, and it worked out for me. It was something on their server. They were doing a lot of work on it this weekend. Guys, take pictures of the correct trades. Go back, circle those tails. If they line up with the rules met, take a picture. If you take a picture during the day and it's rules met, put it in the spreadsheet. If you do market replay, take the picture. Repeat this process every day until you always take the correct trades. Not until you always win every trade. Is that realistic, guys? Say it out loud so maybe you have a better chance of believing it. Is it realistic to expect to win every trade you take? Anybody, what do you think? I know we want to. And I want you to see this right here. This is from a brilliant trading coach. When you stop expecting to win every trade, you'll start winning most of your trades, guys. When you stop caring about the result and only care about the execution, that's when you've turned the corner. Your rules should be rules-based, right? But only if your rules have proven that they win more than they lose. Guys, once you guarantee yourself you can win, that's when you start talking about trading live money. But if you're always taking the correct trades and your correct trades win more than they lose, isn't that how you're proving yourself that you can win? Not because of those P&L numbers, but because of your ability to always follow the rules, to not take the wrong trades, to take those trades that have been proven over and over to win more than they lose. So guys, this piece of paper was taken from that exact same idea. It's based off of that picture. Let me find it for you. This is that exact same path. Excuse me. To minimize your learning curve, post pictures of trades in every class. Win, lose, or draw. And if you win and the rules are wrong, you may have a short-term victory, but long-term failure. How will you know the difference? Well, guys, that's what I'm here for. Feedback. 15 hours live every week. Every question that you post becomes a private session. If you place a trade on the simulator, you participate in class, there's no loss of capital. You need someone to tell you what you did right or wrong when you're new, and this is part of the magic that we do, guys. This is what we offer new traders, new clients, is the ability to be in this classroom and get feedback every day. Populate your spreadsheet. Use a checklist. Guys, this is everything. Outline for study. Whoops. Open link from the new tab. There it is. There's that exact same picture that we looked at. Use a spreadsheet or use a checklist. There it is. The exact same checklist that we talk about. Annotate your charts. You better believe it. Here's an example of how to get that done. Study the historical. Circle those tails. Get 15 images a day, guys. That's 300 pictures a month. Present them in class. Annotate with your checklist. Copy, paste the checklist on your chart as shown above. If you don't have Snagit yet, there's that annotation picture that I posted in the room just a minute ago. Give me your rules every time you give me a chart. Create a database of rules met entries for studies. There's your spreadsheet. Every rules-based entry gets put in your favorite tabs. Look, study these until they become easy to recognize in the moment, until you don't have to think twice about whether the rules are met or not. What you're going to find is that when your rules are met, guys, it takes you 3 to 4 seconds to determine that. The longer you spend, I agree, the longer you spend, the more likely you are that you're breaking your rules. Christina? So Christina, you went long directly into resistance, and you sat through all of that pain and suffering to get up to here? Oh, that's okay. I don't know personally that I would have left $300+ into a termination condition. A little bit of patience, and then Christina, as you clear that area and all the triggers are up, there's that one that you and Ron like so much, right above here. And it's really like a 10-tick difference without having to go through all that pain. Let everything agree. Get that clear path. Really makes life easier. Absolutely. And then guys, once you get your entries, remember all we've talked about is entries. We haven't discussed management at all. Define your management plan. And a mechanical approach eliminates emotion or opinion and tends to be the most straightforward approach for new users. And if you're using the management plan from this spreadsheet, guys, it's 100% mechanical. Your entry is 100% mechanical based on rules. Your stop placement where the market shouldn't go, your targets at 100 and 200, and these pictures will walk you through an entire trade using a mechanical approach. And allow yourself minimum 30 to 90 days to practice the mechanical approach. You'll have your entries long before that, but practice the mechanical approach, those automated exits, and then you can adjust your targets based on experience later. Every rules-based entry, guys, comes with a management opportunity. So take a picture of your entry, take a picture of your management. Create that management plan based on your experience. And then, guys, here is when you're always taking the correct trades. When you're saying to yourself, I'm ready to go live. Nobody wants to do this, but you have to expect that you may be a less capable trader than you initially believe your first time out. Maybe you don't have that trust so much that you won't make emotional decisions. Everyone feels entitled to win, but only those who trade well do. And before risking your capital, test your trading plan. Test your trading plan, your rules, using a prop firm such as Apex Traders. They run sales all the time. Guys, I think they have 1 day left for 80% off everything. For less than $200, you can trade up to $500 or $50,000 worth of capital. Guys, for $44 a month, I have a $100,000 account. You can go out there, starting out, use their money, and you'll thank us later if you realize that you don't know what you don't know, or you're not as prepared as you thought you were, because instead of blowing out $4,000 to $5,000 going live the first time, like I did, you've only got a couple $100 risk, guys, and it's a great way to do it. Paul, what are you saying again? Oh, I wonder if below is a bad one. So guys, here's that example trading plan for you. We talk about this process every day, right? We talk about this process every day. We talk about keeping it simple. We talk about keeping it rules-based. We talk about not confusing yourself by adding more and more rules over and over again. Talk about the best of the best. Oh my gosh. Remember those patterns, guys? So there's the S&P. Look at what just happened. And I want to say we took that same picture earlier, didn't we? Took the same picture earlier. And it's the exact same picture from our termination condition taken years ago. That's not it. Are you starting to believe that the market only works in patterns, that it repeats itself? You will if you've spent any time at all, guys. That's how you got your entries. That's how we understand termination conditions. That's how Ziba knew that the market was likely to push back up. Look at this. Resistance, support, triggers don't follow, pivot stop out at resistance. From 2021, from 12 minutes ago. D, there's your pivot stop out at resistance. Isn't that amazing? Who went long hoping that the market would go up? Anybody? Who went short over here hoping the market would go down? And who's saying with a termination condition that creates a full reversal and giving me odds favorable momentum, who's saying I hope those small triggers break through the area so I can take an opportunity for short? Because that's where everything agrees. It's all right, Paul. Pivot stop out, small triggers below large. Great read, Andy. Andy said, you know what? With a pivot stop out at resistance, he's going short. Everything still says up a little bit. Andy took a market flow signal. Guys, do you see the difference though? Andy, this is a great trade. Andy didn't go short on the first hit because he wasn't going to fight, right? But look what happens when it retests. Look at where his smalls are. Look at where his large are. Look at the difference between this and this. And he identified it. The small triggers are below the large. Andy, this is beautiful chart reading. I'm inclined to not even say it's counter trend because the trend is down because those triggers are on the other side. Maybe not a new user trade, right? Divergence helps. What a beautiful trade. What a great chart read. What a great job using your indicators. Same thing, right? Price reaches resistance. All of my trigger lines are below. Too soon for a short, right, guys? What do you think? Too soon for a short? That's a termination. So we're not looking for a long? So can we all agree rules aren't met? If you're a crude oil trader, you don't have rules met. You're waiting for either this area to break or if it to roll, right? Guys, I don't have to guess whether or not that area is going to hold or break. I don't have to. It doesn't matter. It's either going to happen or it's not. I have zero control over that. The one thing I am in control of is being able to patiently wait. If that red line is going to reverse the market, guys, your trigger lines are going to do this. And then we'll look for an opportunity. Gary, this is the kind of termination condition that sets up an HVA trade, doesn't it? So now, Gary, you can start saying if then, if my triggers roll, because now you have a termination condition. But nothing's rolled. Everything still says up, but everything is still below resistance. Guys, you're in a rules-based holding pattern. We need 73.04 to clear. Rule number 2 hasn't been met yet. Someone remind me. What is it, like 40% of the time we're only reading our indicators? Is that right? Is it 40%? No, it seems like more than that. Maybe it was 60%. Is it 60% of the time we're reading our indicators? What do you guys think? 90 plus? Amen, Ron. 90+% of the time, guys, you're just waiting for advantages. But if you wait for those advantages, you can put yourself in the best chance of success. Well, Gary, 10% of the time, you should actually be trading because of your chart reading. You're going to get fat doing this. Ron, I want you to put all your screens in front of a treadmill, and I want you to dangle a donut right on the other side of those screens. You got this. Yeah. Guys, don't get great at day trading and start making a lot of money and let your health go sideways. Stand up and stretch every now and then. There's a reason that I get up and I take a break every hour, guys. Your brain gets tired focusing for that long, right? Your brain gets tired reading charts nonstop. If you're taking 6 or 7 hours and you sit in that chair nonstop for 6 or 7 hours, you're going to create trades. You're going to create reasons to do something. Stand up every now and then. I'm standing up right now. Walk to the other room. Right? Stretch your legs. Walk around the block. Chase the dog. You have a standing desk? I can't stand that long. My legs go completely numb after about 20 minutes. Right on, Gary. How old were you in the Navy and how old are you now? Because when I was 22, I could snowboard all day long and then I could go out and party till the sun came up. I am not the man I was at 22. Now if I go out and have a strenuous day, guys, it's nap time. And I sleep like the dead. It's okay to rest your brain a little bit. It's okay to exercise your body, to stretch, to clear your mind. You know? Eat breakfast. Eat breakfast. Drink water. If you had an awesome night the night before and you loaded up on beers, yeah, me too, Ron. I'll still go like a champ. But I will be in the fetal position for the next 2 days. Sam, there's no calories in water. Amen, George. Guys, price reached support and absolutely no trigger lines broke through that area. Which rule hasn't been met yet for a high probability trend trade? Help me out here. Rule number 2, right? What advantage does rule number 2 give me? Gives me the advantage of a clear path. Guys, I'm going to tell you right now, there's going to be some of you that are going to say, well, you know what, Mark? I have a termination condition and I have odds favorable momentum and I have a tiny window of opportunity and I don't have divergence and my small triggers broke through. And I'm willing to accept the risk of not having a clear path because of everything else that my chart reading tells me. Would this be a high probability trend trade? What do you think, guys? No. Does it mean that if somebody in this room takes this trade and their chart reading tells them that it's worth a shot? Guys, you're going to grow. With the software, you're going to grow. You're going to start taking trades that would have scared the ever-loving crap out of you in the beginning. But you're going to do it because you have the ability to read your indicators. You have the ability to understand. And I'm really hoping, guys, I'm really hoping that you'll be branching outside of simplicity when you're making money, right? I don't know, D, what do your rules say? Do your rules say don't trade into an area likely to stop the market? If they do, that's not your trade. Sam, I don't understand the phrase gap level. Your large triggers would have to be above the reversal bar marker for the gap theory to come in. D, say it out loud. What did we reach? Type it in the room for me. I want you to believe it. Termination condition. All right. So if we've reached a termination condition, hold on. Here we go. And I'm looking for a high probability trend trade. D, didn't we just take a potential short off the table because this one wins more than it loses? Absolutely. But D, does it mean that one day in the future You might be in a position where you say, because of the good top, because of the momentum, because of the no divergence, because of the tiny window of opportunity, I'm willing to take a medium probability trade and manage it assertively. I bet one day you will, but I don't want today to be that day. Not until you're good at taking these high probability and making money with it. So absolutely, Sam, when we talk about that gap theory, great question. There's one kind of, price reaches the area. I kind of put it over, but your reversal bar marker is right here. And those large triggers remain above it. That's what creates that gap. Price reaches resistance, all of that good stuff. Large triggers remain below. That's what creates that gap. Same thing. Price reaches resistance. Yeah, so that's how we're using that reversal bar marker initially. Just to give us that little, and that's what happened here, right? Closed that gap, then gave us that pivot stop out that reversed the whole market, that gave us odds favorable momentum. Some people will take this trade accepting the risk of that termination condition because of this one. New users say, well, I'm going to let it break out of the range because I love a clear path. Nobody's plan is the wrong plan, right? Nobody's plan isn't the best of the best. Small's below the large, larger wide, angled in the direction of the trend. I'm coming from a termination condition that created a full reversal. I've got a window of opportunity. Does everybody see it? Highest point of the triggers to the lowest point of the triggers. Highest point of resistance to the lowest point of resistance. In a limit order, simply waiting a tick or two below that area. Give me a Y in the room. Guys, look at the advantages. The advantage of momentum, the advantage of a clear path, the advantage of a tiny little window of opportunity. Come and get us. Hell yeah, Paul. Who's going to jump in down here? Scared to death that the market's going without them and increase their risk to all the way up here. Paul says there's not even divergence potential, Paul. We're just relying. Right now, guys, we are at the mercy of the Yahoos. Where's my Yahoos picture? We are at the mercy of these guys. When everything says down and nothing's in the way, I need some deep pocket Yahoos to give us just a little push. Just a little something right to that window, right? That mid-band keeps coming down. I'm not tripping over pennies, guys. I'm going to give it a tick or two. Is everybody with me? Ziba, do you see how I'm below the area of resistance? Show me a picture, Ziba. Is it that support right there? Did we reach that support? Let's walk through what it takes to be a termination condition. So if we didn't reach support, is it a termination condition? What did you just identify, Ziba? Sounds to me like if you got into a trade, you just identified a target. All right, how can that not be a clear path? Is it, Ziba? Let's walk through this because I think that this is a great lesson. Are you saying it's not a clear path because that's just a tiny little bit of distance? Well, of course it's going towards support. That's how we're going to get paid. But Ziba, doesn't our entry come from a pullback all the way up here? Which means from 83 to 58, you have 25 ticks of profit potential if you get in that window of opportunity. Does that make sense, Ziba? This becomes your potential target, doesn't it? And guys, that's such a common thing. And Ziba, I love that you said that. We're not gauging our profit potential based on the bottom of the bar to the next potential termination condition. And it's not a termination condition because we haven't reached it. We're gauging our profit potential from that Fibonacci support from our entry point. So this is only 10 ticks, right? And Ziba, you're saying I'm not going to risk 10 ticks on that trade. That just doesn't even make financial sense, does it? This is a great question. But from our entry point, from our rules-based entry point, it's 28 ticks. I'll take that all day long. Doesn't that make sense? So gauge your profit potential from entry, not from the area near the bottom of the bar you're waiting on the pullback from. Does that make sense, Ziba? That's a very common question. And a lot of people stay out of trades because we're getting close. But remember that the rule for a termination condition is that price, price reaches the area. Where are the triggers? That's your termination condition, right, Ziba? Price reaches the area. Where are the triggers? So price hasn't reached the area yet. So you still have a clear path to get to that area. Entering on the pullback, we still haven't gotten it. Entering on the pullback, which midband? The green midband right here? So when is a midband a potential termination condition? You have the best questions today. A midband is a termination condition, Ziba, when the large triggers remain a full bar away. That's that gap theory. Large triggers are definitely not a full bar away, are they? I'm not so worried about this midband coming from a great termination condition. And now it's just patience, isn't it? Now it's just patience, waiting for the rules to be met. We've got a termination condition that creates a full reversal. We have a full reversal. Look at that. That's a yes. A full reversal. It gives us odds favorable momentum. Nope, short or long. We've got no termination conditions, and we have an area for entry inside of our favorable large triggers. And like Paul said, now we have the potential for divergence, right? We have the potential for divergence, but it's just potential. There you go, Ziba. Not guaranteed. Paul, if divergence is true, where's the pivot that it has? Well, Ziba, the midband is irrelevant there, which is why the midband is irrelevant there, which is why it's not included in the picture. The midband picture is just a gap theory picture, right? So let me open up the gap theory picture. That's not the one. Here's a picture that shows it going into the midband. But on that 13.2, the midband is completely irrelevant. See how my stop is outside of the window of opportunity? Guys, I have the advantage of momentum. I have the advantage of a clear path. I have the advantage of a termination that creates a full reversal. I have the advantage of areas inside of favorable large triggers. And I've entered at the bottom because of the momentum, but I have the understanding that it may go to the top. Does everyone understand that? Just because I entered at the bottom doesn't mean that it can't go to the top. It's a window. I'm willing to accept that risk because this is a trade that typically wins more than it loses. And now let's ask ourselves, does it have the potential to lose? What do you think? Could this be a loser? It could be, but the odds are in my favor. It's got a better chance of winning because I've given myself the advantage of a termination condition that creates a full reversal. Because I've given myself the advantage of odds favorable momentum. Because I've given myself the advantage of a clear path. And because I've entered at the area inside of favorable large triggers with that reversal bar, I can reduce my risk. I went from 14 ticks to 9, right? Or I may say with all of these advantages, I'm willing to keep my risk on the table because everything says this thing has the potential to go down. And guys, let's just let it play out. And I'll tell you what, we'll use Fibonacci for our second target, and we'll use our first trouble spot for our first target. Guys, it takes a while. It takes a lot of study. It takes a lot of practice to believe that this trade gives you all of the advantages that it gives you. And then it goes back to that other one. Guys, if it comes up and stops me out, I don't care because I followed the rules for a trade that typically wins more than it loses. Price pulled right up to the top of that window, didn't it? Give me a Y if you see it. Price pulled to the top of the window of opportunity. Has anything changed on my 13.2? Do I still have odds favorable momentum? Do I still have no termination conditions? Guys, is the market still in the area where it's likely to continue? I feel pretty comfortable. It is new trader. That white hash right here is where this 13.2 bar will become a reversal bar. It's shown on my chart here as well. Guys, I have zero worries right now, and I'm willing to take a loss every time on a trade like this. Every time, because it fits the rules 100%. Because if I take this picture, right, and I annotate my rules, Rule 1 met, Rule 2 met, Rule 3 met, without hesitation, guys, 70 to 80% of the time, I'm doing great. I'm still in it. And like John said, if you're okay with losing 30%, you're going to win 70 and be happy. It's the lie that you try to get rid of the 30% losers. That's the deep, dark, black hole. Guys, these are the trades that I want to see you post in the class. And if it loses, we'll go through it where the rules met. And if it wins, we'll go through it where the rules met. But your losers should look identical to your winners. So if I go to the spreadsheet and I find a perfect short, rules met short, what do you think? Odds favorable, no termination, pull back to the area inside of favorable large triggers. Your losers should look exactly like your winners. And if I go to the spreadsheet as well, here's a perfect long that didn't work. Odds favorable, no termination, pull back to the area of support inside of favorable large triggers. Every one of your trades should look exactly the same. Your losers should look exactly like your winners. Give me a Y in the room if you're okay with that. Give me a Y in the room if you understand why I'm okay putting this trade on. And I don't care about the results. Because now I'm going to take this trade. I'm going to capture it. And watch this, guys. You know what? I'm just going to take my spreadsheet right here. And I'm just going to copy that. Just going to put it on my chart. Whoops, wrong one. My rules are met 100%, aren't they? I'm going to share it to screencast. And from screencast, was that 3 today? Sorry, guys. Discord is making me work for it today. Guys, I'm going to call this one. Perfect short didn't work. Because the rules were still met, right? The rules were still met. The conditions were correct. The advantages were present. Guys, I don't ever want to miss this trade. And now what I'm waiting for, since this one didn't work, since it came up, got me high tick, bummer. If these small triggers roll and my rules are still met over here, I'll look for a second opportunity to enter the trade. All you're doing is creating trust, guys. You create trust through study. You create trust through repetition. But I think John said the most important thing that you can say is that your losers and your winners should be identical. And that was on Sim. Never actually traded there, which is unfortunate. If bid ask goes past. If you stop on Sim, it gets you. Yeah, that stop never got hit, did it? Doesn't happen live. I didn't even notice that. Does everybody see that? Welcome to Simulator. This trade never got our price. Doesn't happen with live. This is Simulator. So guys, technically we're still in this trade, aren't we? Let's just sell it. We'll keep the original stop. Little bit different. And we still don't know. It still may go. You got high tick there in the live market trading? Bummer. I don't know, guys. That's all you can do, right? All you can do is follow rules. And then you usually get a second chance if those small triggers roll. And they didn't. Those triggers never rolled. Guys, is there any questions? That's the day. We talked about rules. We talked about consistency. We talked about making sure that every entry looks the same, right? And then you'll learn to manage it as you learn to manage it as you grow. The more trades you take, the more comfortable you become. There's that termination condition, right? Guys, it's all about repetition. It's all about simplicity. Awesome, Ziba. Every day. And Ziba, you're on that path right now where things start to become a little clearer. So you're going to get more and more out of the information. Guys, I want to give you something to do this afternoon. I'm going to give you some homework from the termination conditions section, guys. This is a 5-minute video. I'm about to turn off my screen. I want each and every one of you to watch this video. It talks about trigger line location in regards to the areas. It's a great video to finish off the day. Guys, I'm going to call it a day. I'll be back tomorrow morning at 9 a.m. It's a balmy 37 degrees and cloudy here. So I am probably not going to go get a tan. You guys enjoy your afternoon. Keep practicing. Keep going through. Keep looking at these looks. Make sure that you're comfortable with what you're seeing. Take a lot of pictures, right? Ew. Yeah, that red tide smells an awful lot. Guys, I'll be back in the morning. If you trade this afternoon, if you do market replay, bring me the pictures to class tomorrow. If you watch a video and you have a question, bring that question to class tomorrow. We'll do it again tomorrow and every day after until you get exactly where you want to be. Ron Smith knew. I like it. You bet, guys. Have a great evening. Enjoy the rest of your day. I will see you guys in the morning. Take care. Safia, safe travels. We'll see you guys soon. Be good, everybody.